Welcome traders, in this video we're going to take you through selling a futures contract. Hey traders, welcome back. Shane from Global Market Trader. I wanted to take you through an example of selling a futures contract, and the chart we've got up at the moment is for the DAX. The purpose of this example, we're going to, as I mentioned, be using our system to identify where the potential shorting setup is or selling setup is. And you can see here as price comes down, and we're going to go through our indicators, but as price comes down we get a little red cross there, which is our indication that there's a potential sell setup. So for us, we need to have a couple of things confirmed. We need to have our directional support. We want to definitely have our profit line turned red, which it has, and you've got your red cross there, which I've marked with an arrow. So that's our entry point. So if we're selling the market, we're going to sell at that entry point there. So because it's below the market at the moment, in that instance we would be sellers. The entry point is 5894.50, and remember that we're selling to open. So the order we would place on our platform. So let's just review exactly who's involved in this process. So remember, we're selling, or we're sellers today. We place our order through what we call a broker platform. So we're going to place a sell. The order we put in is a sell to open. It's a sell stop order because we want to make sure that we only get triggered in once price pushes through 5895.50. So we don't want to get in before that, because clearly on our platform, on our charting platform, our system has given us an entry there of 5894.50 short entry. So we don't want to go in before that price. We want to make sure the market actually takes out that price. So when we're selling, it's a sell to open. The contract we're using is the DAX Futures September contract, so 2010. The exchange that this order gets routed through is the Eurex exchange. And remember that for every sell order that gets executed in the market, there has to be a buyer. There's always two sides to an order. So where the seller, there's going to be a buyer. Now 5894.50 is our entry price, and that market, the price just hits that. Now remember, if we're selling at that price, what we want to do for us to make money on that order, the actual price of this DAX contract, or the actual price of the market needs to fall. So for every point that the DAX moves lower, we're going to be making money. Now for the buyer, who's the other side, if they've taken a buy, they've taken the other side of our contract. So 5894.50, they're buying at that price. They're actually losing, because there has to be a winner and a loser in this game. So if we're making money, they're losing money. Likewise, if this market triggers into our order and then basically takes us out or stops us out, then we're losing money. So at the moment, there is 12 points of potential profit in this order. So that's what we're going for. We're going for a target of 58.82.50. You can see there's what we call our money management level, which is the small dots, and there's our full target. So we want price to push down from 94.50 to 82.50. We want to take 12 points of profit. So once we get into our trade, let's have a look at the details of the trade. Our calculator does all the work. There's our money management. Now money management, that's the level at which we're going to bring our stop to what we call break even, or our entry. So initially our stop starts at 5912.50. So way up there. Now that's our hard stop. So as soon as we get into the market, we work our stop order. That is executed at exactly the same time we get triggered in. So remember, when we place an order in the market, we definitely want to have what we call a bracket attached to that. So our target will be called a buy limit order, and our stop will be called a buy stop order, because as soon as we get triggered in, we want that protection and that target in immediately. So they have to execute at the same time, or they have to be They have to be placed at the same time as our sell to open order is placed. So once that order is placed and we're triggered into the market, we've got a buy limit down here at 58.82.50, and we've got a sell stop at 59.12.50. So as soon as we get into the market, we're actually going to move our stop down with what we call our profit line. So you can see our profit line is that little thin line there that we've got placed on our platform. So that indicator is going to work what we call a trailing stop, a stop that follows the market. So as the market moves down, our stop will move down. So let's have a look at exactly how that is going to work. So instead of being a fixed stop at 591250, we're going to work it down just 2 points above this level here on a sell order. So as it moves down, and you can see it gets down to 590250, so that would be our stop, would be 590450. So now we've got our stop right down with taking the risk, because remember that if we get into the trade here as a sell and the market moves back up, it's moving in the long direction. That's our risk. Wherever our stop is, that's our open risk. So you can see here that if our trade now is at 590450 and we got in at 589450, we basically have 10 points of open risk. So already we've taken the risk out of our trade, or a good percentage of the risk out of our trade. We're going for 12 points, we're risking 10. So let's see how this trade works out. So and we've got to remember that for each point move on the DAX, it's worth €25. Our total profit at the moment in this trade, so it's €25, and we're going for 12 points, so we've got €300 that we're looking to make. So that would be our total profit. Let's mark that on the chart as well. So it's €300. And our total risk is €250 at the moment. So we've got the risk to